Well, simply the Reserve Bank is one of Australia's most important institutions, economic, financial, social. The decisions that are made in the Reserve Bank boardroom about the calibration of interest rates really come down to impacts on what you pay in your home mortgages, your car loan, your credit card, personal loans. So incredibly important. And like a lot of big institutions around Australia, the time is ripe for a review. The last time the Reserve Bank had a proper review was in 1981. The former Treasurer, Josh Frydenberg, was talking about this before the election. The Treasurer, Jim Chalmers, come out this morning and pressed the button on the review that will be looking at that 2 to 3% inflation target band. The Reserve Bank has a mandate to keep inflation within that 2 to 3% band over time. At the moment, it's 5.1% and rising. The Reserve Bank Governor, Philip Lowe, is talking about 7% inflation by the end of the year. And of course, that means more interest rates. But going to the Reserve Bank, the makeup of the board, at the moment, it's very heavily weighted towards business leaders. There's been a suggestion that Jim Chalmers has said that he'd take on board that perhaps there should be a trade union representative on there. We had Bob Hawke in his ACTU role in the 1970s, Bill Kelty also from the ACTU in the 1980s. So everything's being put on the table to see that the Reserve Bank has the proper level of governance to make sure that it's actually working with the times, particularly during a rising rates atmosphere as we come out of the pandemic emergency.
And so has this been sparked by anything controversial, or was this about time that this was going to happen anyway?
Well, of course, in the background, this review was going to be happening. It's a good time to be having it. But of course, one big flashpoint at the moment is that late last year, the Governor of the Reserve Bank, Philip Lowe, provided what he calls a signal, not an assurance or a pledge, that the cash rate that the RBA has would remain very close to zero until 2024. Of course, the economic facts have changed. Inflation is running away around the world. And when the facts changed, the Reserve Bank changed that. And of course, interest rates started rising from 0.1% in May, just before the election. Now they're well on the rise. And the ANZ Bank, economists at the ANZ Bank think there'll be a 0.5 percentage point increase in August and more 0.5 percentage point increases in September, October and November. So brace for quite heavy interest rate increases. The Reserve Bank Governor, by the way, Joe, has been out speaking in Melbourne this morning, delivered a speech with the exciting title, Inflation, Productivity and the Future of Money.
But he was pretty frank. We carried a bit of that live, Peter, and it was interesting to hear him defend what the bank had done over the past couple of years.
Yeah, that's right. And that's right. Philip Lowe has defended this. It's not the first time that he's talked about the inflation targeting strategy and what they need in terms of rising rates. He did welcome the review this morning when he spoke in Melbourne, and here's what he had to say.
I don't view it in those terms at all. I think it's an entirely appropriate thing to do, to take stock of our monetary policy arrangements. I view this as a health check. We've been through a very difficult period. We've had to have unconventional monetary policy, and we're now going through a period of high inflation. So I think it's entirely appropriate for the government to take stock of Australia's monetary policy framework. It's something that we welcome. Other central banks have periodically reviewed their frameworks. We've done that internally, continuously, but I think it's useful to do that in the public domain as well. So we very much welcome it.
And Peter, there's going to be a pretty quick turnaround on this report. And realistically, do you expect that at the end of this that there's going to be any significant change to what the Reserve Bank does? In that speech and questions this morning, Philip Lowe said he wasn't going to preempt what the review was finding, but he was comfortable with that 2 to 3% target range.
Yeah, and that's right. I mean, and Jim Chalmers has said that 2 to 3% target band has worked over time. Philip Lowe and his predecessors have used that 2 to 3% target band. You couldn't see much of a change to that, especially when it looks as though, fingers crossed, inflation starts falling by the end of the year or early next year. But Joe, one thing that Philip Lowe was doing this morning was providing yet another reality check and management of expectations that interest rates are rising. He was very forceful about saying that this morning, saying that rising rates will be a shock to some people. Some people will be able to handle those rate rises because of the money that they put in redraw accounts and offset accounts, something like $260 billion worth of a buffer there. But for people who've bought at the top of the market, taking out very, very big mortgages, perhaps bigger than they should have, well, there's going to be some pain for them to endure.
Okay, Peter Ryan there in Sydney.